What's up, guys? It's April 9th, 2025. I want to give a quick shout out to all the members and supporters since day one. I appreciate you guys. I love the questions you're asking. Keep asking them. We're all going to get good together. My goal really is for everyone to be able to read price action fluently and get paid out. I was able to get a couple payouts earlier this year. I made some options profits, and then this volatility smoked me. So I'm taking a step back until it dies down. And I am definitely ready to get back into it, but one of my favorite books is called Relentless by Tim Grover, and there's another book, Winning by Tim Grover. Something that stood out to me is he says it's important to learn when to stay down. That doesn't mean to quit. It just means to take a step back and reassess the actions and move forward with a better plan with more aggression. So taking those are my two favorite books, and those two books have taken me far. So I'm gonna keep following them, and I'm excited to get back into the markets, but I'm gonna give it maybe one more week, and I'm ready to rip because I've been watching these markets. I've been watching. I mean, I saw this setup today. I was like, I could put on a quick trade here, but I didn't think. I'm just developing that. I need to develop that slowness and that it's okay if I don't take the setup vibe. If that makes sense. But anyways, if you haven't read those books, look into it. Relentless and Winning by Tim Grover. Very good books. And if you do read them, please message me because I love talking about books. If some of you message me on the side about books, Awin, if you watch this video, shout out to Awin. He reads the books I recommend and we chop it up on the side. It's pretty fun. So yeah, let's get into this breakdown and make it a quick one. I don't like going past 20 minutes. Leg one, pull back. Leg two. And within these two structures, there's so many legs. Leg one, pull back, leg two, pull back, leg three, pull back, leg four. Trading range behavior. Breaks out of the trading range, leg one, pull back, leg two, pull back, leg three, pull back, leg four. But you could also say the leg count resets when you break out of the trading range. Trading range is the last part of the market cycle, so let's count from a reset. So this is the range and it resets. Leg one, pull back, leg two, pull back, leg three. We get a trend line break here. You could argue that this is the fourth leg and it doesn't make a new low. Bad for the bears. I've said I'm becoming a broker record when I say this, but there's three types of trend line breaks. Leg one, pull back, leg two, bears make a new low. That's what we got here. Then we get leg one, pull back, leg two, bears get an equal low. Okay, that's one option. We get leg one, pull back, leg two, and we get a higher low. That's not the best option for the bears. That's better for the bulls. That's what we got here on the daily chart was the third option between this leg. Leg one, pull back, leg two, higher low. Bears got short here, but they were trapped and huge rally. We have not seen a bar like this in ages. And I just mean bull bar. Not necessarily the size of the bar, but the size of the bar is also huge. If you guys are trading through this volatility and doing well, hats off to you. Very good job. Pull up to bulls rallied up into the EMA and the overnight session starting to sell off. Big bars climatic. We'll see what tomorrow's bar looks like. If it doesn't touch this high, then now bulls actually have a gap trap and limit order bears that sold the last bar's high. Generally in a trend generally when you see a strong bar, you could put a limit order. If it's a bear bar, you can put a limit order at the high of it or a bull bar at the high of it and you get filled. You can go for 1R. There's two parts to the day. Al teaches when there's an FOMC day, FOMC minutes, whatever you call it. You treat the second day like a new day. So let's talk about the first day. And we can even talk about the market cycle from a market cycle perspective real quick. Trading range is the end of the market cycle. So that means we're waiting for a fresh breakout. And when we get that breakout of the trading range, that's when the leg count resets. So you could say the leg count resets here, and there's a lot going on. Let's talk about it. Gap down, bar one, bull bar, already testing the gap down. So we have a gap down. It opens right around here, rally, sells off. Hold on. What am I saying? Okay, so we have exactly. We have a rally and it sells off. That's what I was describing, the internal of the 5-minute bar. Please, if you guys have questions when I'm talking about these, let me know. when someone made a comment a long time ago that these videos are not for beginners, and that was never my intentions when I was making these videos. They were just to learn to talk about price action. So if I'm getting carried away with certain aspects of the market, let me know and I will break it down for you in Discord or on a chart or in the next video. If it's a good comment, I can make a video out of it. So please, guys, let me know. Gap down, sells off, rallies, bulls try and close the gap, but then they close just around the midpoint. Bar 2 creates a second leg here, rally, strong bar closing on its high. Bar 3 has a bull tail, but it closed bearish. Excuse me, it closed bearish and then sells off into the EMA, giving the market, so there's fractal 3 legs and then there's a visible second leg. Fractal is tails, visible is like we can see it on that chart. So leg 1, pull back, leg 2, about to copy me 1 more second. Okay, so what am I saying? Leg 1, pull back, leg 2, pull back, leg 3. There's your fractal 3 legs, and we get that pullback. Then we have a visible 3 legs. Leg 1, pull back, leg 2, pull back, leg 3. Wedge top, you can sell for up to 10 bars, 2 legs. Leg 1, pull back, leg 2, deep pullback here. In the beginning of the video, I threw up some fibs that I just like this trade because the bulls, the bulls that bought the high here or have a stop order here, they make 1R within 2 bars. And then the market's going to come back, retest, and then we see that with 4, and then they make another 1R. So my trade, if I was trading, I would have a limit order set above bar 1. I would get filled here. I would exit there. There's a lot of trades I actually saw I had to pass up today. This one too. Same context, right? The bears at short, 14 is low, make 1R quickly. Market rallies back, testing the breakout point, and make 1R with 27. So yeah, anyways. Wedge top into resistance, testing the 65 low, sells off bar 10, bar 8, bear bar closing on its low, bar 9 follow through, but then we have a deep pullback. Then we have another type of 3 legs. We have a leg 1, pullback, leg 2, pullback, leg 3. 3 types of trend line breaks for the bulls. That's one. That's equal. That's an equal high. That was a sloppy equal high. And then the third, higher low for the bears. And here they got that third option, higher low. Sells off. 14 closing on its low, 15 closing on its low, 16 trend line break but closing bearish. So that's a fractal leg 2, leg 1, pullback leg 2. In trading ranges, we get second leg traps, and that's what we got here. So here's a fractal 2 legs. You could argue 3 legs with that pullback, and then this entire structure is shot to get its own second leg. Does it get a second leg? It gets an attempt of a second leg down here, but they don't make a new low. So that's the third option, a lower high for the bears, for the bulls. Leg 1 for the, okay, I'm going to go back to bar 19. Bar 19, bull bar closing on its high. Bar 20, closing below the EMA, but closing above its midpoint. 21 ends up being a pullback. I think some traders would short this thinking they're going to get second leg down, but the context is not the best because it's pre-FOMC, so typically you go more sideways, but it doesn't really matter. FOMC and news does not matter. What matters is the price action. And right now the price action is saying big up, big down, trading range behavior. We're just rallying off here, so this structure can get a second leg with a delayed pullback like that. 22, bull bar closing on its high. 23, small bull bar, barely going past 22's high, but it does close on its high. It has a tail, so some bulls could be taking profits, and then we get 4 bear bars in a row. Let me see something here. It's been a while since we've seen a bar that small. Even these small bars are 12 points, so volatility has been really big these last couple of months, last month or two. Yeah, that's 50 points. I definitely remember trading last year thinking like a 50-point day was a good trend day. So just to put that in perspective, like on an FOMC range day, 4 bear bars are still 50 points. I said in an earlier video, if you guys can't handle this if you guys I don't want to say handle because I don't want to get egos involved, but if this volatility is producing stops that are too wide for your account, just take a break, man. I learned the hard way, and I was talking to some people outside the markets, and they're like, yeah, man, I gotta trade 1 micro. Yeah, man, some trades are just a little too big. So it's not just, it's not just whoever's going through that. I don't think there's anything wrong with trading 1 micro. The volatility is nutty. I'm used to 10-point stops, and 1 stop can be like 30 points. So I learned the hard way, unfortunately. Learn from my mistakes, guys. Please, I don't want you blowing up your accounts. 28 bull bar closing above its midpoint, testing the low 24. Same setup here. So when I take these setups, I like them. I didn't take the setup, but if I was to take the setup, the context is always the same. It's how fast did the trader make 1R? So although 24 is relatively a small bar, these bears still made 1R, and I would get filled on 28, and I would make my 1R. So there's 3 trades right there. And you could even argue, here's another one I just seen right there. The bar 19 bulls made 1R within 3 bars, and then I would get filled on 27, bang, 1R on 28. So, and the reason I'm bringing this up is because people have been messaging me, what's the context of my trades? Why am I taking this trade? The trade context is the same. The filter is leg count, market cycle, and it's who makes 1R. And that will develop over time. I'm gonna get quicker with different types of trades, but for now, from a systematic perspective, that's what I'm trading. Bars are shrinking, 31, 29, 30, 31, 3 bear bars in a row. Usually Sean to get a second leg down, but that is also the 3rd bear leg. So leg 1, pull back leg 2, pull back leg 3, pull back leg 4. You could say this breakout reset the market cycle, or reset the leg count, excuse me. Leg 1, pull back leg 2, pull back leg 3. Wedge bottom, Sean to get 2 legs up, leg 1, pull back leg 2, and then we have FOMC minutes. We restart the day here. 46, sells off, trapping bears, boom, strong bull breakout. Look at the tail on 47. So we already can see, we can count 3 legs, 3 fractal legs. Leg 1, pull back leg 2, pull back leg 3. Now this entire price structure is shot to get another second leg up, and we can see that here. Leg 1, pull back, or excuse me, leg 2, pull back leg 3, deep pull back leg 4. 47, bull bar closing on its high. We have a gap here. 48, bad follow through. Shows the market rallied too far, too fast, sold off, but bulls managed to get a bull close. 49, good bull bar closing on its high. Bulls that bought this had enough room to scalp, but then they sold out. You can see that they were more willing to sell. What I mean by that is if you bought this, the rest of the market was selling off when it got back down to that price because it rallied and sold off. 51, bear bar. This is now a first pullback for this entire structure. You can see it got its second leg with 3 legs up. Man, I love counting legs. So the way I count legs is there's going to be about 3 or 4 major legs, and within those legs, there's going to be minor legs. So let's say that's 3 legs up like that, and then I'm going to change the color. What stands out? Red. Christmas came early. So this is 3 legs up, and this, I'm recreating the structure, but I want you guys to see something. And then there's going to be 3 legs within these legs. Trading range behavior, sideways price action, 3rd leg up. These red lines are fractal legs. And then I think this is where the confusion starts. I know this is where I used to get very confused, is how do you count this? And that's how you count it. And then when you get good at counting legs, I don't like the way that looks. When you get good at counting legs, then you can start to count the pullback legs. Because the best the bears can do is get a trading range. Why do I not? So, oh my gosh, they're just getting worse. It's just getting worse. So now each leg has 3 legs. And then you start to understand the fractal nature, and then you can start to count the pullback legs. And that can come in the form of 2 or 3 legs. Something that stands out. Pink? No, that blends in. I don't know. That's kind of hard to see. I hope those colors are standing out to you guys. I'm gonna speed this up because we're coming on 20 minutes. So do you see what I mean? The overall price structure is this dark green leg. I can make it a little bit thicker than a Snicker. And then these legs are made up of smaller legs, and then the pullbacks have legs. So now I'm going to count this just like that, and we're going to call it because we're coming up to 20 minutes. We're going to count this leg. Leg 1, pullback leg 2, pullback leg 3. Now we're waiting for a pullback, so now we're going to count this. for the bears. Leg one, pull back, leg two. Okay, so this is only a second leg trap. It's a first reversal if they're more shallow. Now we're counting this leg, which is this structure. And now we're gonna count those legs. Leg one, pull back, leg two, pull back, leg three. And even within this, there's three legs. Leg one, pull back, leg two, pull back. That's kind of shallow, but you guys see what I'm saying? How this price action is fractal. So the smaller legs build the bigger legs. This is a good example of three legs down. So now we're going to count this leg. Leg one, pull back, leg two, pull back, leg three. And that gives you the opportunity to fade 66. Because the bears just got three pushes down. The best they can do is get a trailing range and so this could be the lower trailing range, any leg past leg two. So leg one, pull back, leg two, trailing range behavior, leg three. And now we have now we're counting this leg up. Leg one, pull back, leg two, pull back, leg three. So, yeah, ask me questions about this because it's really important. This is how I learned to fade bars, is because I'm counting the pullback legs. I'm going to draw in these gaps. I know I kind of rushed through that, but I do like to keep these around 20 minutes. It's just that sweet spot, I think. Yeah, let me know what you guys think. Let me even know if you think 20 minutes is too long. I know you guys are very busy, but I also know you guys are hungry, so I don't want to waste your time if you want them longer. Is what I'm getting at. A lot of gaps. When we have gaps open, we know that the market's trending. When we have gaps closing, the market is range bound. So this gap got closed. The bears tried to get a range, and then they kept two gaps open right here for the rest of the day. Looks like the overnight session had a bear bar. What was starting to be a bear bar. So we can count these legs too, just for practice. Gap down, rally, three legs up. Leg one, pull back, leg two, pull back, leg three. We go sideways price action. Bar 218 breaks below the EMA. This is super good looking, man. The overnight session has some good looking trades. I know I'm definitely gonna, when I start trading again next week, probably like the end of next week, I'm trading every signal that prints. I'm not holding back. I love trading, so I do need to think twice about the oversizing is my problem. Trading is not my problem. It's the oversizing. And I oversized when there was this much leverage, so it was all hell broke loose. Anyways, quick leg count. So breakout restarts the leg count. Minor pullback 219. Sells off. Leg one, pull back, leg two. Excuse me. Leg one, pull back, leg two, pull back, leg three. Now we're pulling back into the EMA. We're testing this low here. This would be a trade I would take. Since the bears that made that shorted 220 made 1 hour very quickly to have a limit order set here. I get filled here, and that'd be that. So those are 3 or 4 trades that worked right away, all from the same perspective. It's really important as we're learning to remain consistent, and then as we develop as price action traders, we can get a little more. You can take this 63 midpoint short because it's going to go 1 tick below 63, and then you scalp out, knowing that you're going to reverse to get long. So there's tons of ways to play the game. What matters is we learn one way and play consistently. Guys, thank you for your time. I always appreciate the people who make it through this video. I know sometimes I ramble, but I really want you guys to just think about the leg counting lesson back here, because this was a good example. Do some exercise and just break down 100 charts over this weekend and just count legs. Don't think about nothing, but don't think about gaps. Just count legs. And then on Monday, you'll be like, whoa, I can see the legs a little more clearer now. Anyways, guys, thank you for your time. Thank you for sharing. Thank you for your time. If you learned something, share the show. I'll talk to you guys tomorrow. Don't be a hoe. Bye. Good night. Adios. See you later.